everyone, my name is Jonathan Sinagpulo and today I will share my work, entrepreneur. So this number one, discuss the advantages and disadvantages of different legal forms of business, organization, and ownership. There are three main types of business organization: the sole proprietorship, partnership, and corporation. A partnership is a business owned by two or more people. The advantages are shared cost, knowledge, and expenses. The disadvantage are profit sharing and personal liability. The definition of sole proprietorship is a business owned by one person, hence the word sole, meaning one and only. So one advantage of sole proprietorship is the owner makes all the decisions. The owner is not obligated to confer with anyone when it comes to deciding the location of the business, who to hire, what to sell, etc. So the partnership might be of interest. A partnership is business owned by two or more people. One major advantage of a partnership is funding. Each owner can help financing startup costs or ongoing business expenses. However, one main disadvantage is that would need to share any profit with this partner. The percentage split would be agreed upon by each partner or may equal a percentage of what they put in start business. The same percentage would be applied if the business were sued. Personal liability issues of a sole proprietor and partnership. And next is corporation. Corporation is an organization, usually a group of people or a company authorized by the state to act as a single entity and recognized as such in law of a certain purpose. So the advantage of a corporation include personal liability protection, business security, and continuity, and easier access to capital. The disadvantage of corporation include it being time consuming and subject to double taxation, as well as having rigid formalities and protocols to follow. So the next one is number two, cite the principle of cooperatives and discuss how can this be applied to start up a business. So all cooperative business around the world operate in ordinance with following seven cooperative principles. Number one is voluntary and open membership. Cooperatives are voluntary organizations open to all persons able to use their services and willing to accept the responsibility of membership. Number two is democratic member control. Cooperatives are a democratic organization controlled by their members who actively participate of setting policies and making decisions. And the third one is member economic participation. Members contribute equitability to and democratically control the capital of their cooperative. At least part of the capital is usually the common property of the cooperative. Members usually receive limited compensation, if any, on capital subscribe as a condition of membership. The fourth one is autonomy and independence. Cooperatives are autonomous self self-help organization controlled by their members. If they enter into agreement with other organizations, including governments, or raise capital from external sources, they do so on terms that ensure democratic control by their members and maintain their cooperative autonomy. So the next one is education, training, and information. Cooperatives provide education and training for their all members, elected representatives, managers, and employees, so they can contribute effectively to the development for their cooperatives. They inform the general public, particularly young people and opinion leaders, about the nature and benefits of cooperation. Next one is cooperation among cooperatives. Cooperatives serve their members most effectively and strengthen the cooperative movement by working together through local, national, regional, and international structures. Last one is concern for community. While focusing on members' needs, cooperatives work for sustainable development of their communities through policies accepted by their members. So next one, number three, is explain the government regulation procedures in starting a business organizations. The first one is the federal regulations. Uh, No matter how far your business operation are, uh, you are you are undoubtedly affected the laws passed by Congress and the regulation issued by dozens of federal agencies. The major areas will legislative activity along with their federal government regulation. Example, taxes and financial regulation. The Internal Revenue Service or the IRS, everyone's favorite federal agency, implements the nation business of tax laws. Thousands of pages of federal regulation provides the details of how business of all types. Next one is employee wage and hour rules. The Department of Labor is the primary federal agency that issues regulation regarding sa employees wages and the number of hours na work. The department establish federal minimum wage and sets rules regarding pay for overtime work. So the next one is workplace safety. So the Occupational Safety and Health Administration, the OSHA, mandates workplace safety procedures, a separate agency, the Mine Safety Health Organizations. Other agencies also regulate worker safety. Department of Transportation, for instance, limits the number of hours. Next, the discrimination law. Anti-discrimination laws identify specific categories of people who are protected from discrimination in the workplace. Of the business cannot discriminate against these defined categories. That is, you cannot base your decision on who to hire or how to advance people within your organization on the basis of certain features such as race, religion, gender, and sexual preference. Is environmental protections. Since the creation of Environmental Protection Agency, the regulatory role when it comes to environmental regulation, in addition to major environmental laws like Clean Air Act, Clean Water Act, and Superfund, there are dozens of the statutes that have produced tens of thousands of pages federal regulations. Next one is and so much more. In addition to the major of regulatory programs to the federal government has been seemingly endless stream requirements for any areas. For example, privacy, transportation, import and export, truth in advertising, intellectual property, medical services, controlled substances, pipeline rules, national security, bribery, contract law, and bankruptcy. Next one is number 5. Discuss the nature of capitalization requirement for a project. Capitalization is an accounting method in which a cost is included in the value of an asset and expense overdue useful life of the asset rather than being expensed in the period the cost was originally incurred. In addition to this usage, market capitalization refers to the number of outstanding shares multiplied by the share price, which is measure of the total market value of a company. The purpose is many projects that result in long-term assets bring the value to multiple accounting periods. Companies capitalize these projects to reflect the value added using the assets. However, will result in a period cost called depreciation. This represents the amount used from each asset owned by a company. Companies can have used variety of methods to determine depreciation. So last one is number 6. Cite the advantages and disadvantages of the different sources of financing owner's capital. Sources of financing. So first one is owner's capital. Advantage, quick and convenient, doesn't require borrowing money, no interest payments to make. Disadvantage niya kay the owner might not have enough savings or may need the cash for personal use. Once the money is gone, it's gone. Next one is retained profits. Advantage, quick and convenient, easy access to the money, no interest payment to make. Disadvantage, once the money is gone, it's gone. It's not available for any future unforeseen problem the business might face. Uh, Next one is selling assets. Advantage, can create space for more profitable uses. Can be quick raise money for unused equipment. Ang disadvantage might not get a full market value of the assets or even be able to sell them at all. Might need the assets in the future. High purchase, expensive assets can be purchased and paid back time. Interest is charged on higher purchase items. Equipment is not owned until the final payment is paid. Next one is venture capitalists and business angels. Advantage niya kay gain more money quickly, potential to raise huge money amount of money. They may offer advice and help. Disadvantage is owner must not give away part of the business. They may have a different vision for the business that owner does. So that's all. Thank you. Good day.